Away you go.
Well, let me just try and get rid of that. Where's the button? There. So what I wanted to do is just provide a brief overview of the business plan and what it is we're hoping you'll achieve by the end of the next sort of 12 months. So I'll just move on. So essentially what we're looking at is what is your business strategy? Where are you now? And where do you want to be? Now, for some of you, it's sort of quite clear from the very start. So I was just trying to remember who was the Blueberry person who's sort of setting up a new business. So it's obviously about developing that business. So where is it now? Where do you want to be at some point in the future, and how will you get there? For others, it might not be so clear cut at this stage. In module 1, we talk a bit more about the business strategy. So hopefully that will give you a clue. So the idea is that you're developing something that's going to achieve something for you by the end of this particular course. So the idea being that you move from your current knowledge to a new state of knowledge. And for some of you, it will be things that you've never come across before. And for others, quite a lot of the material will just consolidate what you already know, but maybe develop that a little bit. So in terms of the strategy, when you've sort of thought about where you are now, where it is you want to be in terms of the business that you're in or the business that you want to be in, how you get there is essentially what the business plan is about. Now, a business plan, the real starting point is the second thing on the list there, which is the business description. So it's about what business are you in? Where are you within the industry? What is your place within the industry? What sort of vision do you have for your business? And there's lots of things in there about, well, who owns the business, how many staffing are in the business, and it might be that you are just an individual or you are just a partnership and that is your business. It might be you're part of a much bigger organization, and I note from the start that many of you were involved in the sort of operations management side, so part of one of the cogs in a much bigger operation. But in terms of the business description, what we're looking at is the overall business. Now, for some of you in the bigger businesses, it might be that you just focus on a particular area of that business. So, for example, I remember one of you saying something about the business was quite big. You were involved more or initially on the machinery side of things, and therefore, and in the sort of banana area. So it might be that your business plan is looking at developing just one product line, for example. So the business description is the sort of starting point, and then you start to look at other areas. Now, the three key areas really are marketing, operations and management, and then the financial. So in terms of a particular business plan, when you get to the end of the program, you won't necessarily have a marketing section, an operations and management section, and a financial section. It might be that dependent on your role within the business and dependent on where you want to focus your particular effort, it might be that you just think about, well, okay, I want to change the way or have input into the way in which which the product from our business is marketed. So your business plan will essentially focus on the marketing area, and it might include some sort of financial appraisal of that. It might be that you're looking at the operations and management side. So does the management structure need to be changed? Should there be more lines of communication? Should there be more delegated authority? So in a big business, is there a role there for individuals to step up or an individual to step down? And one of our first participants realised that they were spreading their management too thin, and it was all about HR and how they could change that. So their business plan focused on the HR side. It might be that it's to do with production and operation side of things. So looking at a particular variety or a new technology that needs to be adopted. So in your business plan, in addition to the business description, you might have something to do with all three of those areas: marketing, operations and management, and financial. It might be that you just focus on one particular aspect. Sometimes with the financial side of things, you may not in your particular business have that role, and we understand that. So you might not have access to certain information. Sometimes in terms of the presentation of the financial, you want to keep that confidential. So at the end of the day, we would like to see it in the business plan, but you don't necessarily need to be presenting it at the very end to others who are on this particular program. So we do recognise there is confidentiality issues in the preparation of your business plan. We then ask you also to consider your critical risks. So in any preparation of a particular plan, things never go according to plan. So what are the critical risks? Now, it might be economic, it might be price fluctuations, it might be natural in terms of climate, it might be human related. So over-reliance on a key individual within a business could be a critical risk. So acknowledgement of those and some sort of analysis of that is quite good, and how you might manage that. The business plan then also needs to include schedules and milestones. What are you going to do? Who is going to do it? By when is it going to be actioned? And what are the key outputs that are going to come from that? And how will you know that you've achieved them? So it's a sort of measurable action list. And then finally, the business plan will have some conclusions and some recommendations. So you might look at two key areas in terms of potential new technologies. And at the end of the day, you'll come down to, well, actually, in this situation, we recommend this, or in that situation, we recommend that. Now, in terms of what makes a good plan, a clear vision. So what is the vision that you might have for your business? And you might not know that now, but you should develop it over time. And that might not come till towards the end of this particular program. It might actually come quite early on. It also, in terms of your business, it's useful to have what is your target market? Where is your product or your service going? Who is it for? What is their need? And how is your business addressing that need? And that can come through in your business description, along with an understanding of the industry and the competitors within that. So within module 1, we take a bit of a look at the industry and key information. And in module 4, with the financial side of things, we look at visions and monetary aspects which can help in terms of that vision statement and the industry and competitors. In terms of the targeted market, we start to look at that in module 3 in terms of the supply chain and value chain. It's also useful to bear in mind the management team, and that management team might be one person, as I've said, a partnership, it might be a bit wider. It's also useful to have financial projections. So in terms of what you might do in relation to the marketing, in terms of what you might do in relation to the operations, in terms of what you might do in relation to the management, what are the financial implications of that? And related to that, how are you going to fund your future development? Where do your funding sources come from? Are they from retained profits? Are they short-term loans? Are they long-term loans? Where are your funding sources coming from? And again, you'll cover that to some extent in module 4, along with the first module and the fourth module in terms of the critical risk side. And presentation and length. A good business plan is comprehensive, but the key points are presented as concisely as possible. So it doesn't have to be a huge, extensive document. It just has to have enough detail to be able to be implemented, but concise enough to be easily digestible. So we've got something called the business model canvas, and I'm going to illustrate that in the next slide. But what the business model does is describe the value an organization offers to its customers. So you might be producing a product in a business which has always produced that product. You might have decided to do something because that's what you enjoy doing. What you've got to remember in business is that you have to provide something of value to your customers in order for them to want to purchase it. So, and in order to create that value, you use resources. So you're using maybe land, or you've invested capital in infrastructure, you've got people. And with people, you've got skills and capabilities. How can they use resources, and how can you use the various resources that you have to create something that's of value that you can then sell into the marketplace? And the idea is that you're providing something of value that generates a profit for yourself. Bearing in mind there is more to life than profit. So some in the industry are in the industry for many other reasons, not just making the greatest profit possible, but enough to be sustainable. So in terms of the business canvas, this is quite a useful little tool. We ask you to look at it, think about it. In terms of the development of your business plan, you don't necessarily have to use it going forward. But we have the idea of a value proposition. So what is your value proposition? And I'll come back to that. And then on the left-hand side, you can see the key activities and key resources. So what is it that you do in order to provide a product or service? So you describe your key activities. And you can look at your activities and say, well, these generate value. These are needed because they're part of the operation in order to get there. So they're key to the operation, not necessarily value generating. You might find, thinking about the activities and the products you have, that some might be considered redundant. And we cover some of this in module 5 and module 6. In terms of the resources you have, looking at your resources, what resources do you have? What is your land, your infrastructure, your people capable of producing? Are there things that long term will become redundant, need to be replaced? Are there things that you haven't currently got and need to invest in? And how can you invest in that? Where can you get the capital from to invest in that? So it might be that you move away from what you're currently doing into something new, or you just change the way you do things. So that's looking at your key activities and your key resources. And in relation to that, you might have key partners. So are you doing everything in your business by yourself? And by yourself, I mean not just as an individual, but as an organization. Or do you outsource things? And who are the partners that you outsource to? Or is it the case that maybe you should be outsourcing? And obviously you're going to have suppliers to your business. So who are they? And what role do they have? And do they help or hinder you? And then in relation to all those areas, you have costs. So you have costs to undertake your activities. You have costs associated with what your partners might be providing. You have costs with the use of resources. So can you somehow reduce your costs or become more cost effective at what you are doing? On the right hand side, we have customer relations. So thinking about the value that your product or service provides, how do you get that value to your customers? Is it just the sale of a product? Is it the service that you provide afterwards? Is it the way that you communicate the value of your product and communicate with your customers? Is it about brand? There are also channels. And some of, so point 2 I've already partly covered in terms of how you plan to deliver your value proposition and how you plan to communicate. Do you have the right customers is essentially the first point, and how do you plan to either keep them or acquire them? And who are your target customers? So starting from the far right, given your product and the service that you provide, your value proposition, who are you targeting? Are you targeting the young, the old, a particular segment, the affluent? What are you targeting? How do you communicate with them? What relationship do you have with them? And bottom right, that generates hopefully your revenue streams. And have you got the right revenue streams? And are you working with the right people, with the right resources, undertaking the right activities to deliver what it is that you want to deliver? So there's some things that we'll try and get you to think about during this particular program. In terms of the value proposition, this just distills it down into a few key points. So what is your product or service for? Who is the target customer? So for whom are you working essentially, apart from yourself? What product needs will you meet? So what is your product delivering? So is it just basic food and fiber? Is it well-being? Is it luxury? A treat? What is it that you are providing? And what is your type of product? So who are you providing for? The affluent, the family, feeding the family, providing a luxury good. What type of product is it? What customer benefits does that then achieve? And then how are you different to your competitor? So in terms of your value proposition, you need to, over the time of this program, think like, well, what is my product for? For who? What type of product is it? What does it provide benefit-wise? Why are we different? Think about competitors. What is unique about your particular product or service? And it might be that you're producing a bulk product, but you are a significant part of the industry, or you're meeting just a small niche demand. Have we got any sort of questions that have popped up on that area? So I've just got silence, so I'm assuming I'm okay to go ahead, carry on.
Yep. There's if people do have any questions, they can pop them in the chat as we're going, if they don't want to interrupt. Just remind you to use that. Thanks, Alison.
I've got a question that comes up fairly often, Alison. I'm not sure if it's the right place. People get, and I've asked this of you before, and I've forgotten the answer. The difference between a plan and a strategy when it comes to business.
So the strategy is the sort of big, broad picture.
Yeah.
So it's, I mean, with the first slide, it's, you know, where are we and where do we want to be? So it's, do you want to be delivering a particular product to achieve global domination, or do you want to be delivering a product that just meets a more niche localized demand, okay, and has some sort of value add? Yep. So it's the bigger picture side of things, yeah, okay. And it's less, it doesn't have detail. It's, yeah, okay, where do I want to be? The plan puts an action around that, or a series of actions around it. So it's, you know, I want to be developing a niche. So it's, how can I, where is that niche? And it might be that you are just the leader in that whole area. So you're just one step ahead of everyone else, developing new products and delivering. And it might be in terms of the product, it might be in terms of the packaging, it might be that you're just delivering to a particular market segment by the way you do things. So then it's, how do we go about doing that is in the plan, the detail of all the marketing and the costing structure and how we do our operations.
Thanks, Alison.
Okay. So what I'm going to do now is just move on to an overview of management accounts, just to sort of do a brief introduction to some sort of key things we'll cover in module 1. So in terms of financial management, there are essentially 2 areas. And I appreciate for some of you, this will be quite daunting. And for some of you, this will be relatively familiar. In terms of financial management, what we have is the concept of control and the concept of planning. So in setting up a business, you will plan what it is you're going to do, and you will prepare budgets. So you'll be saying, okay, what are my costs going to be? What are my revenues going to be? And you'll have a look at, well, where is my cash going to come from? Where is, so in terms of my expenses that I'm going to incur, where is my cash going to come from? And when I've incurred that expense and done the things I need to do, where are my revenues going to come from? So where's my receipts? Where are my expenses and costs going to incur? And it might be in terms of planning that you need to borrow money in order to purchase some land or in order to purchase some infrastructure. So you'll need to think about an investment and undertaking an investment appraisal. to see, is it actually worthwhile me doing something? Is it feasible in the first place to do this? And then once you've set up, you need to keep an eye on those monetary flows, and that's where control comes in. Now, for many of you, you're essentially already in business. So essentially what you're doing, or part of your organization is doing, if you're not involved in that, is the control part. They're keeping an eye on the accounts and the balance sheets, and I'll explain what those are in a minute. And then they might continue tweaking the business, as it were, and continue with planning and preparing budgets. So most organizations will run a yearly budget. So looking a year ahead, they might do quarterly updates, and then control, checking how the monies are actually occurring, coming in, going out. Do they match the budget or not? And why not? And if it's acceptable or if it's not acceptable. So that's what's behind financial management. Now, in terms of why we bother with it, essentially it's there to make sure that we are going to make a profit, and we are going to, over time, be able to assess the financial condition of our business. So is the cash flowing in? Are we making a profit? Is the financial health of the business improving? In terms of measuring those things, we can then also use that for business analysis. So are we getting enough for the future to invest in, for example, new technologies, expansion of the business, alternatives to what we're doing, a change of direction? So we're moving, if you look at the slide from the purpose and use of records, we're moving from the orange, measure, profit and assess, so the actual measurement, to actually doing some business analysis using that data to determine whether we can invest further. Now, we might have the money to do that investment ourselves from our retained profits, but we might need to borrow. So it's also useful to obtain loans from banks or others. And the final point of financial management is, if we're a significant business, then we have to pay tax on our profits, so we need to be able to prepare tax returns. So we have the concept in relation to one area of our business of management accounts, the things we use, the data we use to help us manage our business, and then we also have the concept of financial tax accounts, where maybe we might get an accountant in to prepare our tax return. And the way in which we do those is slightly different. And you'll hear a little bit more about that in module 4. So in terms of the key records that we might want to keep, we want to keep an eye on our cash flow, the movement of funds through our business. So what receipt of monies are we getting in? So what's the cash coming into the business? And what are the payments going out? Now, we might do that monthly, we might do that quarterly, we might do that on an annual basis. We also want to keep an eye on the net worth of the business. So having set up the business as a new owner, for example, we've invested something in it. So we've put money into purchasing land, infrastructure. We've got equity in the business. So we've put some money in, maybe the banks put some money in. At the end of the day, if we were to wind up the business, what we would hope is that we've generated more money than we've spent and built up the assets of the business. So that our net worth of the business, our owner equity, We also have assets in the business, so the land and the infrastructure we've purchased, the stock that we might have generated, and we might have liabilities, so bank loans that we owe, for example. And what we want at the end of the day is the assets to outweigh the liabilities. So if we were to walk away, we can walk away with more than we invested in the first place. We also look at profit, and this is the one of concern in relation to taxation, and that looks at the business operation across the year. So we have an opening valuation and a closing valuation, and I'll come back to those two in a minute. In terms of profit, we can take the receipts that we have made in terms of our cash, so that contributes to revenue, and we can look at the payments that we make in relation to running the business, and that relates to our costs. Now, it's not always the case that the exchange of money is immediate on a delivery of a good or service. Sometimes we invoice, or sometimes we are invoiced, and the exchange of money takes place at a later point in time. We also have things like depreciation of assets to consider, which is also a cost. So our revenue and costs are much wider than our receipts and payments. In addition, we might be building up stocks of things, so we might be holding on to some of the products that we have grown. We might be holding on to inputs that we have purchased for use at a later date. So we've got stocks in terms of the inputs that we've bought. We've got stocks in terms of the products that we've created that we haven't yet sold. And if we take profit over a yearly time frame, an annual time frame, at a point in time when we prepare our profit and loss account, we will have stocks in place. At the end of the year, that's our closing valuation. At the start of the next year, that's our opening valuation, and that gets taken into account. So what I want to do is just run through a short example in relation to cash, profit and loss and our balance sheet. So cash is king. It's all very well starting a business. I'll take January. Starting a business in January, ending the business in December, but all our costs occur up front in the first 6 months and all our revenue comes in the last 6 months. Can we actually afford to be running that business without having any revenue, without having any receipts coming in during that point in time? And how do we manage that process? So that's why we say cash is king. If you're not got a cash flow and you haven't organized an overdraft, you're not going to be able to run the business. Cash is represented in a cash flow statement. So I've got a little example here. So if you can keep these figures in mind, and I've just taken the month of May. So Jonathan runs a business selling vegetables from a warehouse. He supplies market traders. He starts on the 1st of May with a cash balance of 50. He has a supplier deliver vegetables to him for $500 cash. So he gets vegetables delivered to his warehouse. He hands over $500 cash. During that month of May, he then sells his vegetables on to market traders, and he's able to pass some vegetables on to some market traders, and the day he passes them on, he receives $1,100 in cash. And then he also passes some on for $1,500 on 5 weeks credit. So he handovers vegetables to receive $1,500, but it's on 5 weeks credit. So he's going to receive that money at some point in June, depending on when he sold them in May. He has also had trade suppliers deliver vegetables to him to the value of $600 to his warehouse, and he gets 6 weeks credit. So he has vegetables delivered. He doesn't have to pay for them for 6 weeks. So at some point in May, he's had those vegetables delivered. He will pay for them at some point in June. So he gets these vegetables into the warehouse. He does whatever he does with them, package them nicely, pass them on, break them into smaller units. And that's how he adds value and has something to sell. He also pays rent on his warehouse for May, $300 cash. He pays casual part-time staff $360, and he pays himself $500 for his own salary. Okay, so just bear those in mind. So in a cash flow statement, we will have an opening balance. He'll get receipts, so he'll get some cash sales, and then he'll make some payments. So he's got to pay his new supplier, the rent on his warehouse, the wages for his staff, and his director's salary. The opening balance plus those cash sales, those receipts, minus those payments for the supplier, the warehouse, the staff, and himself, gives him his closing balance. So if we look at his cash flow for the month of May, he started in his bank account with $50. A new supplier delivered vegetables to him for $500 cash, so he handed the cash over immediately. He sold some vegetables for $1,100 cash, and that $1,500 on 5 weeks credit, he hasn't received the money for that. So he only has receipts of $1,100. And also note, he did have some other vegetables delivered, but that was also on credit, so he hasn't had to pay for those yet in the month of May. So the only other things he's paid for are his rent on his warehouse, his casual part-time staff, his own salary. So the $50 plus the $1,100 gives him $1,150. Minus the 500, the 300, the 360, and the 500. So that's 1,660 in total. Gives him a closing balance of 510. So let's hope he's arranged an overdraft with the bank. Everyone happy with that? I'm assuming silence means yes.
Yep, all good.
Excellent, thank you. Profit and loss. So this is concerned with revenues and expenditures represented in a profit and loss account. So the revenues, Jonathan sold more vegetables than just the ones he actually received cash for in the month of May. He also bought more vegetables than he actually paid cash for in the month of May. His revenues occurred in June as well, and also expenditure incurred in June as well. And this is represented in the profit and loss account. So we're just going to go through the same figures, but look at profit or loss. So in terms of the profit and loss account, what we have is sales, the cost of the goods sold, so the cost of those vegetables that he's bought to give us gross profit. And then we've got the expenses, so the rent on his warehouse, the wages, the salary, and then the sales themselves. So the one thing missing from the cash flow was the fact that Jonathan had vegetables delivered to him for the value of 600 with 6 weeks credit. So we put that in as cost of goods sold. He also paid cash for vegetables of 500. So the 600 plus the 500 gives him a total expenditure on vegetables of 1,100. In May, he sold vegetables for 1,100 cash. So we put that in. And he had vegetables that he sold to the market for 1,500, for which he will receive at some point in the future that 1,500 currently on credit. So here we're including the cash that is going to be coming in at some point, or the cash in terms of the cost of goods sold that is going to be going out at some point. So his gross profit, even though it isn't currently realized, is going to be 1,500. And then his expenses, as before, are the 300, the 360, the 500. So again, we've got the 1,160, is it? My maths is never very good. And he's made a profit of 1,500 less that 300, 360, 500 of 340. So assuming the bank did give him an overdraft, he would be still in business in June to demonstrate that he's made a profit. Everyone happy with that?
Yep, all good.
Excellent.
No one else is talking.
So the final area we want to look at is capital, and this is associated with something called assets and claims against the business. Now, claims against the business are the liabilities. So what he might owe, for example, in relation to the overdraft that he might have had or does have in May with the bank. It could be other claims against the business in relation to the debt that he owes to the creditor that supplied him with the vegetables that he hasn't yet paid for. And also the final claim against the business is going to be the money that he invested initially. And this is all represented in a balance sheet. So we're now going to look at the balance sheet in relation to Jonathan's business. So there are various forms of balance sheet. What I'm showing you here is the horizontal form. And in this particular one, we've got assets on the left and claims on the right, split into liabilities and owner equity. So the claims are made up of liabilities and also owner equity. Now you might see balance sheets, again a horizontal one, where you have the liabilities on the left and the assets on the right. You might also see a vertical balance sheet. So assets above, liabilities below, or liabilities above, assets below. What you will find with a balance sheet is that you have opening and closing. So at the start of the month of May, in our example, we have some opening assets. At the end of the month of May, we will have closing assets. And again, with the claims against the business, we will have opening liabilities and closing liabilities. And the reason it's called a balance sheet is your opening assets and opening liabilities should have the same figure. and your closing assets and closing liabilities should have the same figure. So if we take Jonathan and his business, he started with essentially $50 cash in the bank. He also closed the business. So he operated with buying in some vegetables, $500 in relation to cash, and $600 in relation to a supplier that gave him credit. So at the end of the month of May, he still owes them $600. So that's a closing liability, his trade creditors. He also sold some vegetables for which he didn't receive cash worth $1,500. So at 31st of May, he's still owed that $1,500. So he's got some trade debtors. So that's a closing asset for him. Now, in relation to both the trade debtors and the trade creditors, we are assuming that he will be paid by his debtors, the people he's sold to, in order that he will then pay his creditors, the vegetable supplier that provided him with credit. In terms of closing, he doesn't have any cash in the bank because at the end of the month of May, he had an overdraft of 510. So that's a liability. So in terms of cash in the bank, we don't put it as if it's negative, if it's an overdraft. The closing on the asset side is 0, but on the liability side, we have an overdraft of 510. Now, in relation to the other notation or the other things that I've listed on the balance sheet, so we've got cash in hand. He doesn't have any cash in hand. We've put the $50 in the bank in terms of the opening. In terms of trade debtors, we've assumed he's not started with any trade debtors. In terms of the other things listed there, valuation of stocks, machinery, equipment, land, buildings, these are the sort of things you might have on your balance sheet. So I've just put them there by way of illustration. But we're assuming he doesn't have any stock. He's moved things on. We're assuming he doesn't have any machinery or equipment, and he's renting land and a building. So we're assuming he has nothing there. And over on the right-hand side, we know he had an overdraft at the end of May. We know he owes for a supply of vegetables of 600. We've got creditors. And he's also got we can also then look at loans, which are slightly longer term than an overdraft or a mortgage. Also looking at this balance sheet, what you'll see is at the top, I've got cash in hand, then cash in bank. So these are what are called liquid assets. They can be quickly realized. When you get down further to the machinery and land and buildings, they're assets, but you can't sell them or generate cash out of them immediately the next day. So they're more fixed. So we move from the liquid, the cash in hand, to the current through cash in bank and trade debtors and maybe the stocks, through to the more fixed, the machinery and the land and buildings. The same on the right-hand side with the liabilities. You might have an agreement for an overdraft for a year. You might have an agreement with trade creditors for a year or 6 months or something. They might have to be repaid quite quickly. A loan might be more longer term, say 5 years. A mortgage might be 20 years. So we're moving from current liabilities to more fixed. So that's just why I've put those in there, just to illustrate those concepts. So looking at our total assets and our total claims, in terms of the opening, Jonathan started his business with just $50 in the bank. So he has total assets at the start of $50. At the end, because he's owed $1,500 by trade debtors, his total assets are $1,500. Now remember, I said this is a balance sheet. The numbers need to balance. So in terms of if he was to walk away from the business on the day he set it up on the 1st of May, he would just walk away with his $50, his owner equity. So at the start of the 1st of May, at the start of this business, his owner equity was 50. He had nothing else there in terms of who he owed any money to. So the total claim against the business is his original $50. He walks away with 50. Okay, so the summation of the opening assets is 50 and the summation of the opening liabilities is 50. In terms of the total claims against the business, there are a number of ways in which you can look at this. If we were to say, okay, it's got to equal 1,500, we know that the claims against the business are the 510 that he owes to the bank, the 600 that he owes his trade creditors, and then there's also the profit that he made that he wants to walk away with. So the summation of those three figures, the 510, the 600, the 390, equals the 1,500. So the way you could do it is either say 1,500 minus the 510 and the 600 gives me 390, or 510, 600, put the 390 in, and that gives you 1,500. So it's a check that you've got your figures right. And then finally, I just wanted to move on to the margin terms and the concept of gross margin, net margin, and its relationship to profit and loss. So in relation to profit, what we can look at is our receipts and our payments and our revenues and our expenditures. And we can come up with margin figures. So in relation to the concept of gross margin, what we're looking at is output from our business that generates revenue. So how much are we producing? What price are we receiving? What is that output value? Minus the costs that we have directly incurred in the production of that. So the more we produce, the more costs we might have incurred in terms of what we can allocate to that gives us our gross margin. We might also have fixed costs, so fixed costs for land, fixed costs in terms of salaries. So irrespective of the amount that we produce, we've got some fixed costs we need to take into account. So when we take that into account, we move from a concept of a gross margin minus our fixed costs to the concept of net margins. With profit and loss, we're also taking into account the value of our opening and closing stock valuation. So if we look at output, we're looking at the value of production.
Can I ask a question, Alison, before
Yeah, of course. Yeah.
Anyone else is welcome to ask questions too. I always find the terminology challenging. So margin, I presume the word margin comes from numbers that were originally written in the margin of a ledger, like when you're adding or subtracting values. Is that right?
It's the word margin is sort of additional.
Okay.
So what is so we talk about marginal revenues and marginal costs. So it's what is the margin that is made? So what is the difference between what is the additional amount of revenue we've generated from the additional expense we've incurred. So if you spend 80 cents
Yeah.
and you achieve a $1 return from that, you've made a 20% margin.
Yeah.
So it's that sort of additional amount.
Yeah. Okay. Thanks, Alison.
Okay. So our output, our value of production, usually relates to the quantity of the production and the value of that in terms of its price that is received. We talk about enterprise output, so the value of a production for a particular enterprise. And then we can talk about the sort of total output in relation to our business. So the sum of the enterprise output plus any additional revenues that we might achieve. So in terms of the input terms, with the gross margin, we're talking variable costs. When we talk net margins, we tend to include, or it refers to fixed costs. So it might be that you're producing 2 products and there are some costs that can't be directly allocated to that particular product. So it might be the land rental, if you can't apportion areas of land, for example. It might be salaries, where you don't take the time of an individual in relation to each different product. So we have variable costs which we can directly allocate to a particular product, and they will tend to vary in proportion to the scale of the enterprise. So the more seeds you use, the more water that you use, the more fertilizer that you use, the more casual labor you use, the more you should be getting out in terms of your product. Fixed costs cannot be directly allocated. So you could be paying rent on a piece of land, and if you're only using half of it, you're still incurring that fixed cost. So they don't vary with small changes in the scale of an enterprise. So you might pay a manager something, and as you're setting up the business, you're using half the land area, and then when you scale up, the salary for that manager is still the same. It hasn't really varied. So we've got a little exercise for you to go away and do. We're going to stay on Zoom, and I'm just going to show you a few things in relation to that. So it's a gross margin for onions, and what we've got in there is we've got our output. So the quantity that is produced in terms of the yield of our onions multiplied by the price that we receive for those onions to give us our output, minus our variable costs. So costs in relation to seed, fertilizer, sprays, application. So we know that we're using particular machinery and fuel to put on that to plant those seeds and so forth, and fertilize and spray. So that can be directly allocated to that particular enterprise. Putting water on, we know the volume of water, and we can accurately say this is what the water is costing us, the electricity to run that system. We've got contract work doing specific things for our onion enterprise, so we can directly allocate that. And we've also got casual labor. So I'm just going to exit that and open up my spreadsheet. Now you've all received a spreadsheet with 2 sheets on it. I've just opened up a blank sheet. So if everyone's happy for me to go on, I'll start talking through Excel and the gross margin exercise.
So the spreadsheets, guys, spreadsheet I have emailed to you, but is also available under the virtual face-to-face folder on Milo. And there's 2 tabs within that spreadsheet.
And I've just got a blank one open just to start with.
Okay.
And if for some reason someone doesn't have it and they'd like me to send it again, just let me know, please.
So what everyone should have is something that looks like that.
Mhm.
Okay.
Yep.
If everyone can let me know that I can carry on.
All good.
Yeah, I'm good.
Right. Yeah. Thumbs up.
Alison,
Yeah.
did you want them to open it up now and work
Yeah,
through
they
it?
can open
Yep.
it up now. So I'm going to say a couple of things now on the assumption that for some of you, this might be the first time you've seen an Excel spreadsheet. And then I'm going to move on to the gross margin. But what I wanted to do is just, so this is what a blank Excel spreadsheet looks like. And you can type text in. So you can just type text in. And then having, if I could spell, that would be beneficial. And if you just press enter, it moves down to the next, what is referred to as a cell. And you can put a number in. Okay, and then you can use the down and up arrow keys as well on your computer. So you can also change the width and height of the cells and the columns. So if I just click on that, where my arrow is, double click, and it will expand to the size of my text. But you'll note that I can hit undo. The text, unless I say wrap it, so we'll just go along. So I just clicked up here, wrap text, keep it there, or just left it and it flowed through. So you can enter what I just wanted to say is you can enter text and you can enter numbers into an Excel spreadsheet. So along the bottom, you have various tabs. So we've got a little exercise for you to do, which is this one here. And the next tab along, just in case you get stuck and just want to sort of check that you're doing the right thing, we've also got the answer. So in this one here, you've got what we're asking you to do. And in this one here, we've got the answers in. So if we start with just this first one, the gross margin one, you can see we've changed width of columns. So that's quite a narrow column. That's quite a narrow column. That's a much larger column. Row height tends to be very similar. And this is for an onion gross margin. So we've put that in bold. We've put the year in, the year end date in, and some instructions. So we're asking you to draw up a gross margin for 1 hectare of onions. We've also said there are some notes alongside each required calculation to guide you through the process. And we've highlighted that. So you can see here, I've got a little bit round there to highlight that. So anything in green is notes about what we're asking you to do in this particular spreadsheet. And where we want to put you to put the answers is in the blue shaded boxes. Now, in terms of the instructions, we have something called cell reference. So each box or cell on the spreadsheet refers to the column G and refers to the row 9. So this cell is G9. So what we've done is we've given you a gross yield of 60 tonnes per hectare. We've actually said that you'll be paid for 80% of that gross harvested yield. So there'll be some loss through harvesting damage, storage, whatever. There is a price of $135 per tonne, and there are costs for seeds, fertilizer, sprays, irrigation, contract work, tractor hours, fuel cost per hour linked to those tractor hours, labour hours, and a labour cost per hour linked to that. And you'll see what I've done is in these cells here, I have just put a number. So 60, 80, and I've identified that as a percentage. So 60 up here is a number. 80, it's recognizing that it's a percentage. 135, it's general, but it's a number format. And again, a number. So numbers can either be numbers or they might just be referred to as general, but they'll come up as a number. And then in this column, I've identified what the number actually refers to. So 60 tonnes per hectare, so many dollars per tonne or per hectare. So what we'd like you to do is go away and just have a go at the actual spreadsheet. So in here, in the blue box, we're saying in the blue box, insert the gross yield. And here we just scroll along. In the blue box, insert the gross by using an equals sign. So on your computer, you'll have an equals sign and the cell reference. In this case, D8 for the source cell reference. So what we're saying is, in here, type the equals sign, and then you can either write D8, or if you click on cell D8, it will identify and you press enter. Okay. Then we give you another instruction. In the blue box, insert the actual amount sold by using the source cell reference. So again, it's equal, and what is the source cell reference? So I'm going to stop sharing for a minute and just come back to people. So is everyone happy with going away and giving that a go? Or do people need for further instruction? For those who need further instruction, at what time do we want to come back? Half an hour?
I'm muted.
Or,
Okay, so it's 3:15 now. Yeah, half an hour. Who isn't all that familiar with Excel?
Yeah, my skills are pretty limited, Mark.
That's okay. That's all good.
Yeah.
Yeah, I just literally use it to sum totals of numbers. That's
Okay,
all I use
all
it for.
Yeah.
Okay.
So
Yep,
what you'll find, Catherine, is in the instructions, it will tell you how to do a bit more than summing. So maybe go away and give it a go.
And I'm
come
happy to
back
have a
with-
go on my own and then come back.
Yeah. And if you're
that's
not
fine,
sure, go to the answer sheet to just have a look.
What about you, Brendan? Did you want to work through it, give it a go first, or did you want to work through it with one of us?
I'll give it a go first, and then see, I'll go from there, right?
Yeah, that's all good. One of the things I want to point out is that whenever we start something new, often the amount of information and new ideas can seem
Overwhelming.
And I take some consolation in reading one of Professor Brian Cox's books, which I never finished, but it was about E equals MC squared, and he's trying to explain it in layman's terms so I'd understand it. But one of the things he said, that even the cleverest people that come through his physics courses, often they don't get a concept the first time round. I certainly find in my life and when I'm learning that I don't get things straight away. And so that's perfectly normal. It's not related to intelligence at all. It's just related to the way the brain works and the way it creates connections. So if like the concepts today are a bit of a shock, don't worry about it too much. Just keep plugging away. And the further we get down the track, the more your brain will start to form those linkages, and the easier it will be for you to assimilate new information. All right, so that's the pep talk, but that's really important to understand.
It is very important. I understood this stuff probably not when I was taught it, but when I started using it and having to tell other people how to use it.
Yeah.
And then I get over enthusiastic and assume you're all along with me when maybe you're not. So yeah.
All right.
Yep.
So now Alison and Hall and we're going to stay online. So you can just jump if you want some assistance. You just jump in, and we'll help you out. Other than that, so how long do we reckon? It's half an hour enough? You're 3:45.
Yep.
Yeah. Okay, so let's get back together at 3:45 and see if we can wrap up a bit early.
Yep.
Cool.
And if anyone wants to jump back in, we'll be on the line.
Yeah, so
if
we'll
you
stay
need
here.
some help and support. So.
All right, or you can just work on it and just you can do whatever you want. You can leave the meeting, or you can just turn your camera off, or you can just work in front of us. That's fine.
Doing it on my phone.
Yeah, I might be.
Thank you.
Okay.
Sorry, I've got a question already.
Yeah, sure.
So when I'm doing the third one, which is the pay yield, I'm just getting it says I can't do what I'm trying, which is that F23.
Wrong. It's wrong. It needs to be G22.
Oh, is that the typo you found?
Yeah, that's what I
Oh,
see.
okay. So
Percentage
instead
mark.
of G24, put G22.
Yep.
Thanks, Jodie.
I wish it was that easy to profit sometimes.
Oops. Oh, Catherine, you're muted.
G24 is where I'm trying to do it.
G24. So the calculation should be G22 times F23.
Yeah, so in the highlighted box on the side, it says F23 asterisk G24. That's
Time, yeah, so it's the asterisk is multiply, it should be G22. We only did that to see if people were paying attention.
Geordie was, and Geordie was extra excited to get cracking on this activity. As soon as you said we were going to do an activity, eyes lit up.
Hands on, I love it. I'm on an iPad, so I don't think I can close and open up Excel on it. So I'm just doing it on my phone.
Yeah. Okay.
I was already late, so I don't want to be kicked out or anything.
All right.
As you can see, it's getting dark here.
Yes, yes, yeah.
It's getting
Yeah,
cold here.
20 degrees here.
Oh, rub it in.
That's a summer's day.
Yeah.
26 in Mariva, and I've had to put a jumper on.
Yeah, I noticed that.
Feels like 8.7 here. It's actually 11.2, so we have hit double figures.
We don't have to submit or anything. We just do it.
Yeah,
Do it.
yeah. Just give it a go, and
The answers are there on the next tab for you to have a look at, so you know, compare to. And if you've already done it, you can go and get a cuppa or snack.
Yeah, might put the kettle on. Anyone want one?
Oh, thanks.
I think I've got some fudge brownies to eat somewhere that Holanda made.
You send some of them too.
Apparently, they're really good. I'm thinking I've got to get that Highland cow picture from Brendan and the chair from James.
I'm eyeing off that chair. It looks like some sort of throne chair. Very comfortable. Can we get some of those, Mark, for our home offices?
I don't know. I asked for a couch at our staff meeting this morning. It didn't go.
I've been asking for one for a while, so you better get in line.
Yeah.
We've got room in now. Well, my work office as opposed to my home office. James, we've been admiring your chair.
Yeah, pretty dangerous working from home. You can get too comfortable.
Set up a lazy boy recliner, should.
Yeah.
All right.
it's really different to doing it in person. Like in person, we'd be going around the room looking at people's screens.
Yeah, there'd be a
Yeah.
lot more chatting.
Yeah.
Yeah.
Yeah. Good.
Hello. Is it just you? I've got a dog. Husband's just returned, so the dog's I'm running in.
Mine's been pestering me since about 3 o'clock.
Well, I'll be back in about 5 minutes.
Yep. Looks like Brendan's got a helper.
I know.
How are you
That's
going,
the best.
Catherine?
That's the best way to do it.
Yep, done.
Awesome.
Well, the little clues help. As long as you follow that, it's okay.
The first trick question.
Yeah, it's really well laid out, Alison. You've done a great job with that.
Okay, thank you. It was new this year because we weren't there in person to help everyone, so we thought we'd give instructions.
And we do often have a range of people that have never used Excel before through to Excel whizzes. So
Always room for improvement.
that's what I like to hear.
I'll show you my two helpers here. Can you see these two in the sun?
Living the dream.
Fast asleep. The Tasmanian sun.
Oh, I think I've seen another animal approach.
Alison, did you get your Milo access sorted?
No, I think. Have you introduced it? Has Tasmania introduced a new authentication system?
Oh, yes.
So
The two-factor
yeah.
yeah.
So I'm gonna have to.
It's really fun.
So we've had it at Lincoln for a while.
Yeah.
But I need to be in office on Monday to remind myself of my Tasmania username and password to make sure that when I download the app, I use because at the moment it's coming up with my personal, which won't get me into your
No. Yep. Understand.
So because I've just normally I automatically log in, so it's already set up. You just click and you go in. So I have no clue what my password for Tasmania is, and I know I need to know it.
Yeah, I got locked out of my email account over Christmas and New Year's because I took an extra week off and I'd forgotten my password because I changed it just before I went on holidays. And I got locked out. Can't remember anything these days.
4, 3, 2.
Interesting thing about Zoom lectures with other people sitting in, we actually established with some of our classes that mothers and boyfriends and girlfriends were sitting in to lectures.
Bit of learning on the side.
Yeah. So we found this out. We found this out by so someone who wasn't muted, and the student was having a discussion with mother afterwards about how interesting it was, and it was live.
Good that that's what they were talking about.
Yeah, that's what we hope anyway. But,
Brendan, how'd you go?
Oh, I'm battling.
Do you
That's
want
not too bad. I've got my partner sitting in, giving me a little bit of guidance.
If you want to go through it one-on-one, we can put you and either Alison, myself, or Mark in a breakout room if you want to chat through it.
Also, in this week's resources, you'll see that there is a tutorial.
Yeah.
That I think Alison Bailey found. So there's plenty of things about, but there's a link there called Excel Learning Resource. And that just gives you the basics of how Excel works. So you might find it beneficial to use that tutorial. But again, as Alison said, we're happy to do it one-to-one as well.
I'm happy to share some of my massive amount of Excel work that I do for work with you, Brendan. You can do as much as you want of mine to learn. Some of the budgets I've got are like, they've got the tabs down the bottom and you've got to scroll across to get all the tabs. So there's plenty of work if you want it.
Georgie sounds like one of the people we had in the first year who had a massive spreadsheet sat next to someone who didn't have anything, and they got on great.
Yeah, good. Yeah, I learn a lot from our accountant. He sort of makes the spreadsheets and I sort of work with him, but it's pretty, sometimes it takes a few minutes to load. It's that big.
I had a undergrad at university in the second year, introduced him to Excel, and when he left in the third year, he was developing his own spreadsheets for use in his business. And he said, I don't need to buy the software, spend thousands on the software. I've developed my own spread. And when he first started, he didn't want to be doing it at all.
Mm-hmm.
So
yeah, it can be very overwhelming.
Yeah.
You feel very disconnected, but like doing online and everything.
Yeah.
See peers, I mean, to like other students and.
Yeah.
Yeah, this is all new for me. Like, this is my first ever Skype or Zoom or whatever you call it.
Yeah.
It's all happening.
You've done well. A lot of people on their first Zoom session can't get video and audio. Had a few of them now over the last few months.
Or some people forget they're on video.
Alison, so how many students are we? We are all today, or there are some missing?
No, there's some missing, and we've lost a few as the day's gone on. So there should be about 14 of us, or of you. Me as well. I'm still learning. Obviously, not having a background in horticulture. But yeah, so yeah, 14, I think.
Cool.
I'll try and get you all on a tutorial sometime so we can touch base again soon.
Mm-hmm.
Yeah, I've missed my annual trip to. We would have been. Well, we'd have been in Melbourne, and the other group in Brisbane. So.
Are we not doing any face-to-face this year, or not anything? I missed the start of the.
Yeah, because of the COVID-19, it's going to be very.
None.
None. Did you say?
Oh, I remember when I was speaking to Claire a few weeks ago. I remember she was saying that there was one that was definitely not happening, but there might be two. Or
yeah, so it really depends on how the situation changes around the country, and what decisions state governments make, as well as institutions like the university. So the university's transitioning back to face-to-face teaching, but a lot of what we're doing is still online. But if we can do it, we'll do it. It's the best way to go.
Cool.
Yeah, particularly the last one, where we're presenting our business plans.
Yeah.
You know, and sorry, mate.
You want to, feel people's nervousness when they give the plans, and
yeah, and also just travelling around visiting farms, and that's great as well. Yeah.
Yeah, I enjoy my trips. So
yeah.
So Geordie, just in case you weren't aware, I'm actually in New Zealand. So
okay.
So normally about this time of year, I'd be hopping over to Brisbane, which is always a nice warm breakaway for me.
Yeah.
So I do enjoy the trips around the businesses.
Yeah.
So. But at the moment, if I leave the country, I'm going to have to be forced to come back and do 2 weeks in forced isolation in a hotel. Fed and watered. So there's
then again,
Brisbane's pretty. Not many flights from Australia to New Zealand. So
yeah. Okay. So is anyone still going? I'm plugging away here, just adding file. So I'm just adding the slide presentations to the face-to-face directory for the first week. So that'll be there by the end of the day. So, well, if we're done, any questions or things you would like to discuss?
Mark, the business plan that we have to present at the end, it can be something done that doesn't exist, right? Or it needs to be based on an existing business?
Ideally, it's something that you can use for the business you work in or for, or your own business. If that's not possible, then yeah, something different's quite okay. It could be a scenario. And it doesn't have to, well, I would encourage you to develop a full business plan. It doesn't have to be for the entire business, as Professor Allison said earlier. It may just be on a component of your business, or you might have a full business plan, but you still decide to only present a component of your business plan. So one of the issues we navigate is that some of you may be competitors in day-to-day life, and we need to navigate competitive advantages and intellectual property, and so some things people may not want to talk about, which is fair enough. That also applies to when we visit other businesses. They often want to know who's coming, just in case it's a competitor, and we always let them know that they reserve the right to tell us things that they're happy for us to know, and to not tell us the things that may reveal some of the things they do that give them an advantage.
Yeah, sure.
So that's a longish answer, Camilla. Yeah.
So that was my comment in the business plan with the financials. There may be things that, in terms of the written business plan, the people that are seeing it are essentially, I guess, Mark and Alison. But in terms of the presentation, it might be that. So if all things go well, you're presenting to the industry and the others who are here today, and you might not want them to be aware of some of the financials, and we perfectly accept that. And historically we've had separate rooms, or we've said there's no need to present the financials in the presentation. So, and I've certainly received assignments with financials in, with the caveat that this is confidential.
Yeah, in fact, all of the assignment material you submit is confidential, so we don't share it unless we've got
permission.
The other thing we will do, though, is when we have our next face-to-face, we'll ask some of you to present your assignments if you're comfortable doing that, and that's to generate discussion. As much as anything else, but also so that you can learn from each other. Okay, so now is everyone aware that next weekend, so next Saturday, we have our virtual horticultural business tours?
Should get the email.
Yeah, you should. Yeah, Geordie, you might not be.
Yeah, sorry, I'm not sure what's going on there.
So if you missed it in the introduction, we're going to visit over the web. We're going to visit a number of businesses. So Pinata Farms, it's run by Gavin Skur, and Nova Life Sciences, which is run by Trent DePoli, but Trent's also been involved in Ice Chili and Avo Fresh, I think it is. We'll talk to some Tasmanian people from Coaldale Walnuts, and we'll also talk to a company in New Zealand called Apple Press. And these are all leading business operators. These people have demonstrated that they know how to do business and make it work. So it's a great learning experience. They've also invested a fair bit of time. So we've because it's online, we actually worked with a retired ABC journalist, Sally Darkus. So Sally used to do ABC Rural Hour and I think maybe Landline, I'm not sure. So she's an accomplished journalist, and so she's developed videos with these people as well. So it should be good content. You also get to talk to the people. They'll be online with us, so we can ask some questions about their business. You might want to think ahead about what questions you might like to ask. And so taking all of that into account, it'd be great if you can make it, because these people are busy people, and they're influential, and they've put in a reasonable amount of time to make it work. So if possible, could you do your utmost to be there? We'd certainly appreciate that, and you'll benefit from it. Now, is there anything else we need to talk about, Alison and Alison?
I don't think so.
Okay. All right. Well, it's been great to meet you all, and I'm looking forward to doing this with you. I think they're going to make a great team. We'll round up the others for next time as well, and we might see if there's we might well, we have tutorials during the module, so we might Alison Hall, we might think about having one earlier rather than later, try and get everyone together again.
Yeah, I'll try and get a couple in. I mean, we'll meet next Saturday. But yeah, whether you'd want to catch up during next week or the following week. Might send around a doodle poll or.
Yeah, okay. And Ashley's just asked a question. We actually can't distribute your contact details. So Ashley's asking and send phone numbers or email addresses to her.
I just
to facilitate the WhatsApp.
get away from Alice.
What's that? Oh, someone was asking something.
Just wondering if Ashley, you might want to put your contact details in the introductory thread on Milo, and people can text you their numbers or something. Because we don't have everyone here.
Yeah, okay, I'll do that. Yeah.
Okay. Yeah, that'd be a great way to do it. All right. Well, you know how to find us, so please do if you need to. Again, it's been an interesting experience doing it this way. Have a great weekend. Enjoy yourselves or enjoy working. Yeah. All right. Thanks, everyone.
Thanks,
guys. Have a good afternoon.
Yeah. You too.
Bye.
Bye.
Thanks, Professor Allison.